Hello and welcome to the ASB Investment Podcast, the show that keeps you up to date on the markets and helps you make smart choices with your investments. These are entirely our own views and that of our guests. It's not investment advice, but we know plenty of experts at ASB that will be happy to chat if you need. Well, welcome to the latest edition of the ASB Investment Podcast. I'm your host, Nigel, and I hope you're all keeping well. And just like any investments and savings you have, you're keeping safe and secure as the country heads well and truly into autumn. In this latest episode, we're doing a slight departure from what we normally talk about in terms of charts and what's up and what's down and how markets are performing. And we've got the pleasure of chatting to a wonderful guest, Joe Kelly, the CEO of the Centre for Sustainable Finance. Welcome to the podcast the first time, Joe.
Thanks, Nigel. Great to be here.
And to kick things off, tell us a little bit more about the Centre, what it does and why it was set up.
Sure. So the Centre was set up in 2021. It's a relatively new organisation and we're a charitable trust. And what we're really focused on is improving New Zealand's financial system so that, if I put it really simply, more money reaches the ventures that are driving sustainability outcomes and helping to make sure that New Zealand stays competitive and resilient over the long term.
And what does your, I guess, as a, it's not often we have a CEO on here as well, so what does your typical day look like as a CEO? Is being the CEO for the Centre the same as what people might imagine a typical CEO's day is like, or is the role fairly unique?
I think it's fairly unique. We are a relatively small charitable trust, but our partners include banks and insurers and investors and philanthropies and Crown financial institutions. And so we bring those organisations together with regulators and policymakers. And what's unique about it is that we work together to inform sustainable finance policy. And we spend also quite a lot of time thinking about how that policy can be implemented by New Zealand businesses.
Sure.
So I'm a connector. I make sure that we are able to have those conversations in a way that is focused on kind of positive outcomes.
Yep.
And I also make sure that we're connected to ideas and talent and expertise from other people who are doing this work internationally.
The connector part, I guess, is really, really so important because my uneducated view would be there's so many wonderful things happening out there, but if they're not sort of known to each other, things can kind of happen in isolation and maybe not have like the full benefit from them.
Yeah, exactly. So we need to stay abreast of what's happening in this environment globally, which is changing really quickly.
Yeah.
So regulation is changing all over the place. International customers are changing their expectations, as are international investors. And so that takes time and it takes sort of a concerted effort. So that's a really big part of the role that the Centre plays, is just taking the time to foster those international dialogues and make sure that New Zealand is connected. Yeah.
And obviously you're not just the CEO for the Centre for Sustainable Finance. What's outside of work for you normally look like?
Sure. There's not much outside of work when you're working on this agenda, but I have 2 little kids.
Lovely.
And so I spend a not inconsiderable amount of my time with them running around on the weekends, and that's really about it. We're pretty focused on doing this work and the family.
Okay, so to start with, what is, I guess, to take it right back to the start, what is sustainable finance and why is it important to Aotearoa New Zealand?
Sure. So there are 3 aspects to sustainable finance. The first is the process. So when banks and investors talk about sustainable finance, what they're talking about is a process of incorporating environmental and social and governance, or ESG, factors into their decision making. And the aim of sustainable finance, kind of broadly speaking, is to promote sustainable economic growth and ensure the long-term stability of the financial system. So it really focuses on minimising harm, or, kind of minimising negative social and environmental impacts. The second part of sustainable finance is the criteria. So that's ESG.
Yep.
So ESG can be thought of as a tool for sustainable finance, and it's the non-financial criteria that investors use to evaluate companies on certain factors related to ESG. So in and of itself, even though it's highly politicised at the moment, ESG isn't a values-based system. It's just a set of information that investors and rating agencies can then apply their own judgments and values to. And then the third part is transition finance. So this specifically focuses on helping companies, providing finance to companies to help them move from where they are today to where they need to be tomorrow. So transitioning their activities or their business models.
And there's that transition sort of, it's not just towards climate stuff, but it could be social and governance, like helping them transition that way, or it's mostly climate?
Yeah, sure. So I think the phrase transition finance sort of comes out of transition planning, which is part of the climate disclosures.
Yeah, we'll get to that. Yeah,
but actually it's about transitioning on whatever metrics from where you are today to where you want to go.
And how's New Zealand placed, I guess, as the world moves closer to in particular, a lower carbon economy, let alone the other factors? Like, how do we stack up against the likes of, say, that lot over the ditch?
Yeah, so our friends and colleagues in Australia...
That's a better way of describing them.
We do quite well alongside Australia, and we can go tit for tat on different component parts of sustainable finance with them, such as sovereign green bonds or having the disclosures in place. But what has happened over the last couple of years in Australia is that they've become really coordinated and really aggressive.
They've been connected.
Right. And they've realised the opportunity that lays ahead of them if they transition. So the government has laid out a really clear vision for the future of their economy, which is to be a renewable energy superpower.
Wow.
And that seems to have been quite galvanizing for them. And so if you think about finance just as an enabler for what happens in the real economy, then having that galvanizing framework and knowing from an investment perspective what's the scale of the opportunity, and are you going to be working in an enabling environment, and what's the transition story for the country, I think that that helps with decision-making around where you want to be doing business.
Yeah, because I guess some listeners don't naturally maybe think of Australia as a sustainable finance leader with all the all the resource sector and stuff like that. But I guess to what you're saying there, when they apply themselves to something, they go for it, right?
Yeah, and so what they're putting together, they have the Australian Treasury leads out their sustainable finance agenda. They've developed a strategy for how finance sort of helps them to meet that overall vision for their economy. And that's the part of New Zealand that we're still missing, is that overall vision and the clarity of purpose about where we want to go. Yeah. So even though we've got a lot of the component parts in place, we don't have that sort of galvanizing framework or clarity of opportunity, let's say.
Well, just lucky we've got a centre who's been set up exactly for that. Given our small size, I guess, in relation to Australia or let alone other economies, what impact do you see little old New Zealand playing on that global scale? Or to put it more bluntly, can NZ make a difference?
We can make a difference. Of course we can. We can make a difference first and foremost to our own lives and the way we the way we experience life here in New Zealand. But I think we do need to be cognizant of our place in the world and our relative size. And then we need to direct our efforts for maximum value. So we definitely need to harmonise and keep up with international frameworks and sort of best practice. There's just not really much sense in reinventing those for ourselves. And then one opportunity that we see quite clearly is setting the bar on transition finance in agriculture, which is a less settled or well understood kind of area globally. And so New Zealand could quite easily move into that conversation quite quickly. And that's been a focus of some of the discoutions we've been having with the centre.
And so when you say setting the bar, I guess like being the leader to establish like a global best practice or, thought leadership there, right?
Yeah, so globally there are things called sustainable finance taxonomies, and these are the sets of classifications that we develop to identify what is a green or a transition economic activity.
Right, yeah.
That helps investors and people who are making decisions about where to allocate capital to know that they're doing that decision-making in the context of kind of an objective and science-based framework. And the definition around agriculture is still emerging globally, and specifically the definition of what is a transition activity in agriculture is emergent. And New Zealand has been working on what a what might be the priorities for a taxonomy for New Zealand. And that's one area where we have an opportunity not just to keep up with what's happening globally, but to sort of lead the conversation.
Because that marries up nicely with sort of the opportunity to kind of lead on sustainable or clean kind of, dairy for, as I've heard, in world markets. But I guess as you were talking there, I sort of think, if you can sort out the finance side as well, that kind of leads the way, right?
Yeah, so the whole point of these frameworks is to make it easier for investors to make those choices and to then, feel like they're credible when they're making claims about what is green or sustainable in their portfolio. So that when we talk about sorting out the finance side, having that kind of clarity and the framework to work within, we think is enormously helpful.
So with all this talk of sustainable investments, I guess one natural question from it is kind of, the energy sector, right? So it's still a focus for some investors, a lot of investors, and it's provided good performance over the last couple of years. What are your thoughts on that for investors who are, in relation to what you've been describing so far, thoughts on that in relation to, for investors who are focused on performance outcomes?
Yeah, sure. I guess I would say which investors aren't focused on performance outcomes. So we work closely with iwi and philanthropy and family offices and Crown financial institutions and, boutiques and mainstream institutions. And I haven't met anyone who's not focused on performance. So the question then becomes, first of all, is it helpful to identify an exceptional group who are particularly focused on performance relative to everyone else? I think that maybe doesn't exist. Yeah. And secondly, what are you prepared to do to achieve the performance targets that you've set for yourself? And that's a values-based decision. Yeah. But I guess from where we sit, what I would say is that if you're thinking about the longevity of your own business, you might want to be building that muscle around identifying opportunities in industries of the future and not so focused on the kind of sunset industries.
Sunset, yeah.
Yeah, so I think ultimately it comes down to choice and the role you want to play in this transition and how much you want to invest in building your own skills and capability to participate in that on behalf of your investors.
Sure.
But if you need data, I suppose there's some research which suggests that over that longer time frame, the ESG and sustainable funds perform well relative to the more traditional ones.
Sunset
exactly.
And stuff.
No one ever said net zero would be a straight line, right? So there's probably going to be.
Right. And what role do you see, I guess to that point, what role do you see for fund managers having in the transition to a more sustainable future, whether I guess the most common one is that sort of path to net zero or a lower emissions profile? What role do you see fund managers having?
I think fund managers are crucial to it because anyone who's been working in sustainability for a while will tell you can't get there without capital.
Yep.
And so everyone has a role to play. Specifically, this was a pretty live discussion at the Conference of the Parties, COP28 last year.
Is that what COP stands for? Conference of the Parties?
Yes.
I've never known what that was. I've always wondered.
Just COP. COP's
right.
fine.
Okay, COP. Yep.
Everybody knows by now. It's been going on for a really long time.
Yeah, should know.
Anyway, so there's a lot of conversation about the kind of capital flows from global north to global south to support the global transition. And so with that comes this conversation around how different parties engage on their own terms or within their own mandates. So if you are stewarding pension funds or retirement funds, then you won't be able to operate on the same terms as philanthropies or other types of investors or governments. So the question becomes then, how do you identify and organise these opportunities so different actors can come in on their own terms? And what is coming up a lot in that is the kind of emerging role for intermediaries or partnership brokers who have alignment in terms of the outcomes that they want to achieve, but don't necessarily have skin in the game in the same way.
Right, and is that the centre as an intermediary, or is it a different type of entity?
It's a different type of entity. Yeah. So we're sort of we're a convening body, but we're not about doing deals and getting kind of projects together. But certainly there are commercial organisations who can play that role.
Is that like the local government funding agency, like in terms of as an entity that can kind of bring together funding opportunities for fund managers to come in on? Like a sort of, is that an intermediary in that or not?
No, I wouldn't say that they're an intermediary. I mean, they provide finance to local governments.
Yeah, sure.
And so what they're a great example of is having kind of an innovative approach to sustainable finance. So the question about whether or not New Zealand can make a difference, organisations like the LGFA are pretty well recognised globally for their innovation with the way that they provide finance and incentivise councils for emissions reduction. So that's an example really of how we can punch a little bit above our weight and we can be a bit of a sandbox, I suppose, for innovative approaches.
And so what's the Centre's thoughts on, moving, directing capital towards private or unlisted assets? I mean, typically in kind of pension funds or fund managers, you look at large liquid markets, international ones that are easy to get in and out of. But, what's the Centre's view on trying to encourage more investment in off-market or unlisted assets that can help that sustainability drive?
Yeah, sure. So there's a piece for New Zealand here around capability. And if you look at California, CalPERS, which is a large pension fund in California, have just announced their own commitment to investing $25 billion in green private market assets. And so green or not green, some of the work that we've just done on KiwiSaver investing in private assets would suggest that we need to build a bit more of a muscle in New Zealand around that type of investment. And what we found through that work is, ultimately KiwiSaver fund managers have a duty to respond to the needs of their investors. And in the case of KiwiSaver, many of those investors have a longer term time horizon, a longer investment horizon. And so what we might want to see is that type of investment, that private asset investment here in New Zealand, and those potentially higher returns that you can get over those longer time frames. And also potentially, additionally, I would say the option for KiwiSavers to invest in line with their values when it comes to sustainability.
Sure. And speaking of fund managers, I guess, there's that sort of two schools of thought in terms of engaging with companies around their sustainability practices, whether ESG or not. One school is kind of deny, hold back capital from them via screening or exclusions. The other school of thought is, staying invested in and then influencing. I guess what's the Centre or your view on, is one school best or is it kind of a bit of both?
Yeah, sure. It's definitely not binary.
Sure.
It's more of a continuum. So the risks that we're facing, like climate change or nature loss, I like to quote Matt Winneray, who says that you can't stock pick your way around them. And even if you could decarbonise your portfolio, you can't denature it. And so investors need different levers to kind of deal with some of these risks and to get the outcomes that they want from companies. So the logic behind divestment was that if you avoid companies of capital, it would encourage the business to improve their practices. But actually, quite often those businesses just get capital from someone else who may or may not be so focused on those social and environmental outcomes. So what we've seen over the last 5 years is a rise in the way that investors steward companies and the way that they engage on sustainability issues, or in some parts of the world, we talk about long-term value creation, not sustainability. And in New Zealand, over the past couple of years, we've developed our own stewardship code, and we've seen an uptake among New Zealand investors of corporate engagement and shareholder action, which is another way of saying stewardship, which has just overtaken negative screening as the kind of leading responsible investment strategy for New Zealand.
Sure. And I guess I know companies are going to have to start as part of that reporting on stewardship later this year, I understand. From that report, sort of as a segue into another report that the team at ASB know very, very well. Our wonderful team at ASB have been hard at work, to say the least, on the mandatory climate disclosure regime kicking off this year. So some entities have been reporting voluntarily already, but this year in FY24 is kind of the first year we have to put a report out. So, as those reports come to market, what information should investors or customers be looking for, from an ESG perspective, or, what's the Centre going to be looking for?
The nub of it all is transition plans. So does the company understand where it needs to get to, and does it have a credible plan to get there? And so the External Reporting Board has been thinking about this a lot. They're the ones who develop the climate disclosure standards, and they've already published a set of questions to get started on developing or assessing those transition plans. But a couple of years ago, the Investor Group on Climate Change published their own guidance for corporates on investors' expectations for corporate transition plans. So those two pieces of guidance would be a really good place to start if you're thinking about what you want to be looked for. And of course, there will be other ESG metrics that are important, but in the context of the climate disclosures, transition plans is really where it's at.
So I guess if you're a big company, and some of the companies we've described around, that are required to do the disclosures, they're the ones that are naturally either publicly listed or a certain size, or big fund managers of a certain threshold. But should only big listed or big private companies be thinking about sustainable finance? Or I guess if there's a listener tuning in right now, should small private companies be thinking about it too?
Yeah, so if you're a smaller company, you might not be captured as a reporting entity under the disclosures as your bank would be, but you're essentially a data point for that reporting entity, whether it's your bank or a company that you're in the supply chain of.
Yeah.
So this net's going to get tighter as the disclosures are implemented in other jurisdictions. And so what you want to be doing is getting yourself ready to be able to provide that information up the chain to the entities that are caught up in the disclosures.
So if you haven't been already asked, expect to be asked for some of it. Is that a fair statement?
Exactly. In order to meet their reporting obligations, banks and other financial institutions will have to collect that data, and it will have to get more robust over time. So they will likely ask you for your performance on certain metrics related to climate and maybe other ESG factors, because they need to report that to their own customers and investors and regulators. So it may not come to you directly from them. You might be a tenant, for example, in a building that's been built with a green loan. And so your bank might not ask you, but your landlord might ask you, because that's how they fulfill the requirements of their own sustainable finance that they've taken on.
I guess the counsel there is, if you're not thinking about it already, maybe add it to your list of things to
start to get ready. I mean, that's the whole point of the disclosures, is the flow through of information through the economy, so that people who are providing capital to other people have a better understanding of the risks. So it will come to you over time. There's
sooner
no doubt.
rather than later. And just finally, what are the key initiatives the Centre's working on that we haven't already described? Is there anything, I guess, that you would like to leave the listeners with that it shows the breadth or specialisation that the Centre's capable of? Yeah,
sure. So we're working on recommendations to the government for a sustainable finance taxonomy for New Zealand, and Australia is a little bit ahead of us on that, but we certainly can catch up, and we need to really make sure that's fit for purpose for New Zealand. We'll be engaging on the upcoming capital markets review and looking at those settings around KiwiSaver investing in private assets, looking at whether there are actual impediments or just sort of mindset
perceived
and business sort of decisions that need to be made. And we're also working on a set of simplified ESG metrics for small and medium-sized enterprises, which hopefully will be helpful to those companies who are going to get caught up in those disclosures.
Reporting, right? Well, that'd be very, very helpful. Well, it's certainly evident that you and the Centre have a lot going on. I mean, this has been such a wonderful chat. I've learnt a lot. I've learned about taxonomies. I've learnt a bit about what the thing I really like is also kind of that what small to medium enterprises are going to have to start thinking about if they're not already being asked about it. That's a really, really useful tip for people to sort of, build into their business plan for next year. We're nearly at time, but again, a huge thank you for coming on the show today and introducing us and the listeners to the team's work. I appreciate this topic can be quite broad and at times confusing as well, but, as I've said, it's something that investors and business owners are going to need to know more and more about every year into the future. The one final question, as we always do, is to wrap things up. What's something you're reading, watching, or listening to that you can share with listeners to take away?
Sure. I've been reading a book by a woman named Naomi Klein, not to be confused with Naomi Wolf.
Is that no oil?
No, it's a book called Doppelganger, and it's about essentially the fact that she was consistently over time confused with another person named Naomi Wolf, who has a vastly different sort of worldview than she does. And I guess what I like about that book is it just reinforces the fact that we like to think in binaries and put, one thing against another thing, but actually there's a whole lot of nuance in most of the stuff that we're dealing with at the moment, sustainable finance included. And so there needs to be room for that conversation and an acknowledgement that there's sort of a shadow side to most things.
So I think I've heard of that, but was she literally confused with someone else for a long period, was it?
Literally confused with someone else for a number of years, and I think probably still is confused with her. So that was the framing for the book and the topic of doppelganger.
Oh, I love a book recommendation. That's why they're my favourites, actually, rather than podcasts. Or a book recommendation from a guest. My simple one was just a plug for our new, it's not as exciting as that, but our new monthly fund performance material that we publish every month, funnily enough, alongside how our funds have been performing. So you can check that out on our website, asb.co.nz, just to get a bit more insight, just like we do on the podcast with what's been happening around markets and the funds we run. So that's it for today's episode. Joe, thank you so much for coming along. I really appreciate it. And thanks to our listeners for taking the time to tune in. I hope you found the information useful and you're a little bit better informed today about why sustainable finance is such a critical role to play in not just our country's future, but the world. But until next time, happy investing, and it's bye for now. Thanks for listening to the ASB Investment Podcast. If you have any thoughts on this episode, or if there's anything you'd like us to discuss on a future show, get in touch with us at podcasts@asb.co.nz.